Every financial bubble begins with the same promise: easy money, fast freedom, no consequences. And every time millions believe they've finally escaped history, they never have. From tulips to tech to crypto. Bubbles don't just destroy money, they destroy lives. And the most dangerous part? We are inside one right now. They say money makes the world go round. But history shows us something darker. Money can also spin the world into madness. Imagine people selling their homes just to buy a flower bulb. Imagine fortunes rising and collapsing in a single day, not because of war, famine, or invention, but because of collective hysteria over the price of something with no real value. From tulips in the 17th century Holland to NFTs in the 21st century, economic bubbles reveal the most dangerous truth in financial history. When greed takes over, reason disappears. And every time, the crowd insists, this time is different. It never is. To understand bubbles, we need to understand the fragile psychology of wealth. A bubble always begins with a promise. The promise of quick riches, easy financial freedom, an escape from ordinary life. In the early stages, it feels rational. Prices rise because demand rises. Investors feel smart, visionary, ahead of the curve. Then momentum builds. More buyers rush in, not because they understand the asset, but because they're afraid of missing out. Stories that spread on social media within hours caused people to invest without knowing what they were getting. The important thing wasn't understanding, but not being too late. What's being traded becomes secondary. Land, stocks, railroads, internet companies, digital images of apes wearing sunglasses. It doesn't matter. What matters is the belief that someone else will pay more tomorrow. At its core, a bubble isn't about real wealth. It's about the illusion of wealth. And illusions always shatter. The most famous example in economic history is the Dutch tulip mania of the 1630s. 17th century Holland was rich. Amsterdam was a global financial hub. Trade flowed in from Asia, Africa, and the Americas. People had disposable income, and they were willing to speculate. When tulips arrived from the Ottoman Empire, they were exotic and rare. Owning them became a status symbol. But then something changed. Tulip bulbs stopped being flowers. They became financial instruments. By 1636, people were trading tulip futures, betting on what bulbs would be worth later. At the peak, a single rare bulb could cost more than a skilled craftsman's yearly salary. Some sold for the price of a house. Then, in the winter of 1637, buyers stopped showing up. Confidence cracked, and almost overnight, prices collapsed. The Dutch economy survived, but for many individuals, it was total ruin. The lesson was clear. When price detaches from utility and survives only on belief, collapse is inevitable. 2 centuries later, the same pattern appeared again in Britain. The South Sea Company promised access to vast riches from the New World: gold, silver, trade routes. In reality, most of it was fantasy. The company tied itself to government debt, turning national obligations into speculative shares. Stock prices exploded. This scene did not belong only to that century. In the years following the pandemic, millions of first-time investors rushed into the markets, and within months, shares of companies with no profits multiplied. Even during that earlier period, members of parliament invested, aristocrats invested, and even the king's inner circle joined in. Then reality arrived. Trade profits were tiny. The hype was enormous. When confidence collapsed, fortunes vanished. Even Isaac Newton lost a fortune. He later said, "I can calculate the motions of heavenly bodies, but not the madness of people." That sentence explains every bubble that ever existed. The 19th and early 20th centuries repeated the cycle again and again. Railways, land, gold rushes. Each promised transformation, each created paper wealth, each ended in bankruptcy. In the 1920s, the United States became the perfect bubble machine. Easy credit, borrowed money, mass optimism. Years of cheap money blurred the line between risk and opportunity. Borrowing to invest became normal, even encouraged. Between 1924 and 1929, stock prices tripled. Ordinary people bought stocks on margin, borrowing most of the money. When the crash came, it didn't just wipe out investors, it rewrote global history. Bubbles don't just destroy speculators, they destabilize societies. The dot-com bubble followed the same script. The internet was real, but prices were fantasy. Companies with no profits were worth billions. When the bubble burst, trillions vanished. Yet something important remained: the infrastructure. That's the paradox of bubbles. They destroy wealth, but sometimes accelerate progress. The housing bubble was different. It wasn't just speculation, it was systemic. Mortgages, derivatives, leverage. By 2007, people believed house prices could never fall. When they did, the global financial system nearly broke, and ordinary families paid the price. Then came crypto. Bitcoin began as an experiment, a response to broken banking systems. But speculation took over. Prices exploded, not because of adoption, but belief. By 2021, crypto markets reached unimaginable levels. NFTs sold for millions. People convinced themselves that digital ownership meant permanent value. Then, the cycle ended. By 2022, over $2 trillion had vanished. A few insiders escaped, most didn't. That's how bubbles always work. So, what do all bubbles have in common? Human behavior, greed, fear of missing out, and structure. Easy money, cheap credit, elites selling dreams. And now, look around. Stock markets, real estate, speculative tech. The signs are familiar. Prices rising faster than reality. Experts insisting it's different. People afraid to miss out. History doesn't repeat, but it rhymes. And the rhyme is getting louder. Bubbles are not just financial mistakes. They are mirrors of society. They reflect our fears, our hopes, our identities. That's why they're so powerful and so dangerous. Because people don't just believe they're making money. They believe they're part of a revolution. History always ends this story the same way. Illusions collapse, reality remains. So ask yourself this: what bubble are you standing inside right now? And will you recognize it before history does? If this gave you a new perspective, subscribe. History has the answers. I'll show you where to look.